welcome to Chart of the Day Cafe for Tuesday, May 10th, 2016. Just going to read our disclaimer quickly. Trading stocks has a high level of risk and viewers should complete their own due diligence on any stock or underlying that they intend to own. 100% of the content of this video and communique is intended for journalistic and educational purposes only. This video and all indicators, strategies, and articles herein should not be construed as investment advice. Thank you for your patience with that. So we always start our videos off with a look at the Russell Index. We want to get an overall lay of the land before we look at any individual underlying charts. And for that we use the IWM, which is the ETF that represents the Russell 2000, and we're looking at it on a 5-year monthly time frame, paying particular attention to this blue channel that the Russell traded within through all of 2014. So here's where we are right here, right now. We had this candle for the month of March, bullish candle that pushed us back into the channel. April's candle, a little more indecision with a wick at the top and a wick at the bottom. And then here we are for the month of May so far. It's early in the month. I've got this little minor area of support drawn in here on the daily chart. I'll show that to you in a minute, this orange line. But I'm filming this at about 8 a.m. on Tuesday morning. The futures are trading in the green in a healthy way. So it looks like we will get that pickup off this area of support. So that's the monthly chart. Couple of things I wanted to show you on the weekly chart before we move to the daily. So here's the weekly on the Russell. I see this little wedge pattern happening that would suggest a smaller breakout and perhaps run up to this upper blue band. So we're getting that price strength in the markets this morning. Will it be enough to break it out of this little wedge on the weekly and have a strong bar here for the week and follow through that takes us up to that blue band? I'm starting to see a few signs that suggest that that might be the case. I wanted to show you, that's the Russell. Here's XLK, which is the ETF that represents the technology sector. Doji last week at this area of support, and it looks like we're going to get follow through this week, and it's trading in this wedgie pattern. So it looks as though tech is going to show some strength here. Again, anything can happen, but by the look of the chart and the volume picking up, we may get some follow through and lift off this orange line. Again, we're looking at the weekly charts. The other one I think that's very interesting is Consumer Discretionary. We've had 1, 2, 3 dojis in a row on the weekly chart at this area of prior resistance. It's looking for direction. If market strength comes into the technology sector and the Russell overall, it may suggest that this will break higher and that we will have a positive candle for this week that decides, after all these dojis, that this XLY, which is Consumer Discretionary, might want to go higher. I never know, but I'm just saying by the looks of the charts, that looks very interesting to me. So with price strength continuing, I will be putting a chart in front of you this morning, and that chart is Smith Wesson Company. First thing I want you to notice is the beautiful uptrend that this chart is in. This is the 2-year weekly chart. We're at this area of support, and we're getting a strong candle so far for the week. Let me move it away from the chart for a minute and tell you a little bit more about this company. Smith Wesson is in the leisure products category. They are a manufacturer of firearms in the United States. It produces a range of pistols, revolvers, and tactical rifles, hunting rifles, that sort of thing. You know what Chart of the Day Cafe? It's all about putting charts of value in front of you. This one has a really nice high value score, currently trading at $23.12, but worth $43.84. It's in a sector that is ticking higher, and it looks to me as though Smith & Wesson will want to catch up with the sector overall. It's got a forecasted earnings growth rate of 26% going forward, a PE of 14.10, but here's what I think. It does not pay a dividend. Normally I like to put dividend pairs in front of you, but this one does not pay a dividend. But here's what caught my attention. The sales growth over the last 12 months for Smith & Wesson has been 61%. Wow. So what I'm saying is, if we do see continued strength in this market with that kind of forecasted earnings growth rate, those value scores, I would suggest that this one might start to lift off this area of support. So here we are. This is the daily chart. You can see my orange line, and it's all about price being up and over that 8-day EMA at Chart of the Day Cafe. We are only interested in things that are trending higher, and when price moves up and over that 8-day, we're interested. When it closes below, we are no longer interested. So it looks to me like Smith & Wesson may want to pick up here. They're only announcing earnings sometime in the middle of June, so you've got some runway on earnings. The other thing that I wanted to say is Strum Ruger announced their earnings last week. They were stellar. Strum Ruger is a Chart of the Day Cafe pick. Let's go back 2 years. We put it forward over here. Let's go to the weekly chart. We put it forward over here as one to keep an eye on for your watch list, and it's had this beautiful run up. We reiterated this one week or two ago as one to keep an eye on. This one does pay a dividend, but since we've already put this one forward, I'm going to put Smith & Wesson forward as my new pick, and we'll start tracking this one and keeping an eye on it. So I'm going to move it back to the daily chart, put my little green circle here, and say this is one that you might want to keep an eye on. I'm never making any recommendations whatsoever. I'm just putting charts in front of you that have growth and value that might be good additions to your own personal watch lists. In preparation for today's video, I dug up a recent article on Smith & Wesson. They're in a cycle of gun sales that is showing nothing but strength, and the article suggests that not only is the Obama initiative to control guns kind of spurring a surge in gun sales, people are trying to buy guns before legislation comes in, but it talks about the strength in the industry and that there's an overall feeling that people want to have protection. It's not so much the Obama thing anymore, it's more about people wanting to have personal protection devices. So Smith & Wesson should benefit from all of that. I will include this article with today's video. And with that, I will leave you. I'll put a video out again on Thursday. Have a great next couple of days. Thanks very much.